Sally, what do we know about this meeting?
So hi there. The aim seems to have been to try to assuage investors' concerns that the set of dramatic reforms the government introduced for private education companies might actually only be limited indeed to private education and not extend beyond that. So to recap, China had banned companies that teach school curriculums from making profits, from raising capital or going public. And it was, the government's most extreme step yet, perhaps, to rein in companies. It blames for things like exacerbating inequality and increasing financial risk. And the steps, they sparked a huge sell-off. There was a 3-day plunge which erased nearly 800 billion of Chinese equity value as investors really fled from the industry and other internet stocks, fearing that these things could extend to spaces beyond Chinese education. And so in a bid to stem concerns and reassure investors, the China Securities Regulatory Commission vice chairman held this call with several international banks where we understand the message was relayed so as to leave bankers understanding that this was targeted at education policies and not meant to hurt companies in other industries.
So obviously the broader desired effect is a demographic one, but what have we seen as a short-term effect so far?
Yeah, their steps, their measures, they seem to have worked since a number of indexes bounced back today. We saw China's CSI 300 index rebound from early losses, and the NASDAQ Golden Dragon China index also gained. So those indicate that fears investors had that this may be a broader attack on profitable industries are starting to subside. And indeed, there was many believed that Beijing won't seek to annihilate an industry that still plays an essential role in grooming its future workforce. But this does, of course, inflame and drive a lot of fear among investors.